What's going on, guys? Amy Nicholas back with a video that I felt was appropriate to make given the conditions in the market today, which are red. So I'm recording this video on Friday, February 21st, and the markets are just greatly tanking right now. I would say that probably most of the gains that we had seen over the last week and a half, or 2 weeks, yeah, they've all been erased. I know from looking at my own portfolio. Several of the things that I had turned green on was like, oh, we're up. Yeah, I turned around and now I'm, red. It's all good. This is investments, right? We're not expecting to get rich overnight on this stuff, but it is kind of cause for concern where you're like, okay, well, what do I do during these crazy times, right? Volatility is very high. The market could be floating up one day and then crashing the next, or seemingly to crash. What was very concerning to me was I decided, I do day trading, and I decided to actually not trade today because of the rest of the days of the week where I wasn't doing so well. So I was like, we'll just take Friday off. And I'm glad I did, because the pre-market was showing a different story. Pre-market looked like, oh, lots of green, everything's going green and everything's floating up and it looks happy, right? And then as soon as the market opened, everything turned around and has just continuously gone south. So the two ETFs that I would continuously invest in right now, and in fact am doing so myself, in my IRA, and one of these ETFs I continuously buy in my Robinhood account. So the first one, SCHD, which is Schwab's dividend ETF. It's basically the top 100 dividend growth companies in the US, and they did a stock split a couple months back. Very inexpensive price. I think we're looking at like 27, 28 bucks, depending on where it's at today. It's one of the few things that looks like it's holding its ground when you have these volatile market downturns. And that was one of the reasons I started to invest in it way back in December, because December looked bleak, as far as like what's going to happen next year. We had this great run. November was great. And then December was like, oh my gosh, what's happening? So yeah, who knows, right? But looking ahead, SCHD for the win. It's not a very costly ETF to put money into. You can, easily buy a share versus having to dollar cost average on these other pricey stocks, like I've mentioned. That's pretty much what I do, although I do have a daily investment. You can see my other video on this channel about putting between $5 and $10 a day into SCHD, and that's just to kind of space things out. That's really the only reason I do it in Robinhood. But yeah, this one I just heartily believe in. Every time there was a dip in it, like when these other stocks would do well, right? Tech stocks, S&P, and other things were up, SCHD sometimes goes down because people are putting their money into, growth. And SCHD is not necessarily known as a big growth ETF. However, it's stable and it provides a quarterly dividend. So it's actually pretty darn good. I think the last quarterly dividend, I haven't gotten my first one yet because I haven't been in it for 3 months, but the last one paid about 26 cents per share. So yeah, I'm really starting to accumulate. I've got a little over 300 shares in my IRA, and I've got about 30 shares in my Robinhood account. So accumulation for me, name of the game. I'm not putting like all my eggs into it or anything, but that's one I would definitely keep investing in right now. The other one is JEPI, and this one is not a dividend paying ETF. However, it is a premium income paying ETF. So they're selling, they're doing covered calls inside this ETF with the investment money. And they're betting more on the stable kind of companies in the S&P 500. It's not the volatile JEPQ, which is the NASDAQ companies. But JEPI, JEPI is the ticker. This one, JP Morgan, they're trying to do covered calls and options on these, S&P 500, slightly more stable stocks. So what I've seen with that one is it's similar story to SCHD, where it's holding its ground. It's one of the things I'm actually way more green on than anything else I've invested in the last couple months, which is encouraging. So one, you've got some growth. Two, you're getting paid a monthly premium on this. So for each share you own, the last time I got paid, it was about 34, 35 cents a share. and the share price is about 58 and some change right now. So again, not terribly expensive. You could easily buy up several shares if you had a little bit of, a nest egg saved up. And then you get that monthly premium every single month. You just have to own it by the before the ex-dividend date in order to qualify for the dividend. Hold your shares, get your payout within a few days. I didn't do a video on what I earned in my IRA, but I did do a video on what I earned from JEPI, having it in my Robinhood account when I was purchasing shares through that account. So feel free to look on the channel and see that. But yeah, these are the two that I personally think is worth continuously buying right now, because clearly when you have these big swings in the market, at one point I'm looking at the market percentages, and now I'm talking intraday. This isn't like the close of the market yet. We're about half an hour from that. But when you see stuff almost down 2% market-wise, like S&P at one point was almost negative 2%. I think the NASDAQ is below, it's even worse than 2% of a drop. When you see that kind of volatility, it definitely makes you question like your individual stocks, your other investments. Me personally, I'm going to do like a full review this weekend and look at everything I'm invested in and just set some parameters. Like, am I going to continuously buy into this? Am I going to sell out of this? That kind of thing, just sort of being on top of it a little bit more so instead of letting things happen as they do sometimes. Who knows what Monday's going to open up like? We just don't know. The news every day seems like it doesn't even matter what they say anymore. It's just people like scrambling and freaking out. And I think it's because there's a lot of uncertainty right now. There's a lot of people wondering like, hey, what's going to happen with crypto? Like, should I pull all my money out? Like, is it going to go up ever? Is it going to trade sideways? Is it going to go down? And so they're moving some of their things from the riskier side to the less risky, kind of moving into stocks. But now even like some of these big tech stocks, you're seeing some really big falls. Like Meta was way up, and of course we're reaching all-time highs. This is bound to happen. You reach all-time highs. Of course, there's going to be a drawdown, a pullback. But you kind of also wonder, okay, how far down are we going to go, right? And should I continuously go into this? One of my concerns, actually, talking about these two ETFs and why I want to put even more into them, is, I did a video just like a week ago about Axon. And this was trading at a high, don't quote me, I'm not sure if it was all-time high, but it got up to about $714, maybe $717, and a piece of news came out and the thing just dropped like a stone. I have never seen a stock drop $175 in a day. Hugely surprising. Thankfully, I'm dollar cost averaged into that. I don't have a lot invested in it as I just started buying it. So I'm kind of going to reevaluate this weekend if I'm even going to keep the holdings I have. I've already paused my investment to purchase daily on it right now until it finds its bottom. And if its bottom is too low for me to go, yeah, I'm out. So guys, JEPI and SCHD are the two that I'm focused on right now. Feel free to do your own due diligence, find which ones you think are stable kind of things that you can hold on to and still make some money off of. Like, this was the reason I initially started investing in these two. Was I was like, okay, no matter what the market does, even if my initial investment into these goes down and I'm negative, I'm in the red, it doesn't matter because I'm still going to get paid either monthly or quarterly on something, right? Like, this is, quote unquote guaranteed income. And it's better than just watching your other holdings that might be more into the growth side, tech side or something like that, just plummet, right? Like, that's just not fun to look at. Now, you could just walk away and say, I'll come back in a year or two. But, me personally, I'm way more active investor these days than I was in the past. And I just want to be on top of it. So hope you guys enjoyed the video. Feel free to check out the other ones on the channel. If you are also considering moving your holdings into stuff that's more safe and secure, put quotes around that. Feel free to share in the comments, like, what are you going to, shift over to? You're going to move to cash? Or are you going to, go into bonds? I'm just curious what people are doing. Feel free to share. Me personally, I'm not a bond person. I've been in bonds for like a decade, and I was like, never again. Like, felt like I lost a lot of potential, but that's just me. So feel free to share what you're looking to put your park your holdings in while the market is, having its heyday. And I'll see you guys on the next one.